Mr. Wonderful is back in the building. It's good to see you.
It's good to be Mr. Wonderful.
Always.
Bitcoin, I'm long. I haven't sold any off. It's a 5% weighting in my portfolio. So is gold. And watches are at 3%. Well, Toronto time, LA time, Abu Dhabi time. That's what I'm talking about, baby. I'm talking about time zones here. And of course, these are both fantastic pieces. And mostly I wear red bands, but I thought just to tease you with this puzzle. I mean, that's...
I'm gonna come over and have a look
You're
at
never
that
even
one.
going to get to touch this watch. You'll never see this watch again.
Where you feel this inflation battle is, the outcome of what's going to happen in November. How do I position myself? What do I do here going into the latter half of this year? Give us both sides of the equation. It's episode 5.
You say, what number is this? 5?
It's
Lost count already?
monster week, Sean, around here. We had a big name in the building, and it was a fantastic conversation with Mr. Kevin O'Leary. Fun fact.
Friend of ours.
Friend of the family, yeah. Fun fact. Did you know that Kevin O'Leary quit the first job he ever had?
I believe I probably knew that,
And
but
then-
it doesn't surprise me.
And then never worked for anyone ever again.
Yeah, okay, that's strange.
We were going to talk a lot in this episode
How
about
old he was.
quitting and when the timing is right to quit your
Okay,
job.
I should have looked at the notes.
As we move into more and more on the entrepreneurship side. I thought that was a fantastic mentality and approach. But anyways, we had a long conversation in the building this week with Kevin O'Leary. I mean, highlights, takeaways from it?
I mean, even just what you said right there, doesn't that sort of go with what we've been talking about? Making a decision early on and sticking with it? Like,
Yeah.
he immediately knew that working for somebody was not going to work for him.
Yeah.
And I think it works for many people, but most of our listeners hopefully are in that same thought.
Yeah.
What can I do to stop sort of the rat race and what I'm in right now? It doesn't mean quitting, though. I think that was pretty dramatic. Obviously, it happened pretty young in his life.
Yeah.
What I took away from Kevin is confidence.
Yeah.
You know, you threw a bunch of different questions at him, and we're going to go over some of this stuff. No matter what you feel about either your political opinions or what you feel about the economy, just believe in what you're saying.
Yeah.
And we asked him about different industries and politics here in Canada, the banking system and whatnot. We're going to go over this, but he had strong opinions that were backed up by facts and just that confidence. And we talk about that all the time while we're trading, while we're dealing with our significant other, while we're building a business plan. Have confidence that what you're doing is going to work.
Yeah.
Will it always? No. You know, but show that you're looking for something. And that's what I got from Kevin, is just like, wow, this is a confident man who believes in what he says.
Yeah, and this is a guy that has, let's be honest, his hands in a wide range of not only different industries, but different aspects of those industries. And a guy that, and one of my takeaways from this was, and you touched on it somewhat there, but the amount of information this guy can hold on a wide range of topics is outstanding and fascinating.
It's passion, too.
Yeah.
You know, we see him all the time on Shark Tank, passionate about building businesses, small businesses, helping people get to another level.
Yeah.
And then just that passion that he had about the politics, and we'll talk about crypto.
Yeah.
Like, it's just believing in what you're doing. And that's coming across. And I think that's something that we're trying to do and are doing here on the podcast, giving ideas and just believing in the system of discipline and of being yourself and of going for things, you know, and controlling your own destiny to some extent. Right?
Yeah, we talk a wide range of topics in this conversation, guys, right from, you know, inflation, interest rates, the Bank of Canada, his thoughts on the government in this country, his thoughts on a wide range of topics. Make sure you stick around right to the end as well, because he kind of went in a different direction that I wasn't expecting in the healthcare industry.
Okay. Yeah, that was interesting.
Gave us some insight into, you know, what he thinks AI, or specifically what he thinks AI could be used the best for, which I thought was absolutely fascinating, and, you know, gave us a little bit of perspective, I think, on where he is in life.
Remember, it's those topics that we talked about before. Not being complacent. You know, we talk about AI. Sure, you can buy Nvidia and all the obvious things, but he was talking about layering.
Right.
adding on to current businesses. How can you use different, he was talking Substacks, different things like that in your business to stack up the different clients for the healthcare, so that we can do 30 operations in one day because we just are that efficient. We're that efficient at notifying people, at making sure time frames are ready to go. So there's so much more underneath everything.
Yeah.
And it's that idea of not letting anybody get ahead of you. And that's something that I took away from Kevin. And it was just like, what's that next thing? Not only looking to invest in it, but look what he said, brand recognition. We had some fun with him about Wonder Bread,
and Wonder Bras
and Wonder Bra. I mean, Kevin, I mean, big comment, but it's that Wonder ads and the Wonder Care. He talked about his love of watches. So again, how many times I use sports gambling and betting and stuff like that as examples of businesses to step into, because that's something that I'm passionate about. What is Kevin's number one passion? I mean, I know he likes to play the axe there. He loves the guitar, but it's watches.
Yeah.
So he found or is looking for, potential areas where we can improve that business and then also, obviously, make a little bit of money doing something with it, right? So there you go. Find something that you're passionate about and you understand. And just by knowing the business, he's able to, again, provide hopefully a product to many other watch lovers out there to protect their investments.
A lot of inspiration coming from a guy that's, let's be honest, is just ruthless in his approach and, on such a wide range of topics.
What do you feel about that, the ruthlessness?
I think you have to be in this world. If you're not, or you don't have a certain aspect of that in your personality, you get run over.
Don't we all have to have an edge?
But that comes, I think, with the edge.
I think that's
believing in that something that's there that is there and you can take advantage of. Let's not leave the good folks waiting here. Enjoy the conversation. Again, wide range of topics. Mr. Wonderful himself in the building this week. Enjoy the conversation here with Kevin O'Leary. Have indeed. There he is, fresh off filming the first section of season 16 of Shark Tank. Mr. Wonderful is back in the building. It's good to see you.
Great to be here. Thank you.
It's been a long time. We're happy to have you back in the building. There's so much to touch on. I want to get right into a few things here. Let's talk about crypto out of the gate. A lot of people talking about a major level here coming back into play for Bitcoin. It's been tested many, many times, the 60,000 area. Let's start from a high level. Where do you see the industry right now? And then I want to get into regulations and what the election is going to bring.
Sure. I'm actually bullish Bitcoin. I'm long Bitcoin, have been for quite a while, and I'll tell you why. For Bitcoin to achieve the lofty heights people have been talking about for a decade now, it's going to have to be fully integrated into the financial services systems all around the world. And the only way that's going to happen is through fully regulated platforms. And so if you take stock of where we're at, all the crypto cowboys are gone, or they're in jail, or both. And Gensler, who, for all of the criticism he's taken, remained consistent on his message. And he basically pursued them all and wiped them out and threw them in jail. And I get it. And I think what he wants is this to be an asset class like any other. It could be gold, could be other alternative asset classes, fully regulated by commodities and exchanges. And he is achieving that. At the same time, which is a positive, getting rid of crypto cowboys is a positive. Here's a second positive. Within Congress, on a bipartisan basis now, there's a movement afoot to legitimize digital payment systems, including Bitcoin and Ethereum in that metric. And so there's many, many different bills going through the system. And this time they look like they're going to be successful right after the election. So that's going to clear the way for, let's say an institution wants to put a 3% weighting in Bitcoin, they'll be able to do that. But in order to do that, they have to be able to have liquidity on a compliant exchange. Now, that's where it gets interesting, because in the U.S., Gensler is still in litigation with Coinbase, the largest exchange in the U.S. And so institutions really can't put a lot of capital there, because they're right on the other side of the desk. They're regulated on every other asset class on a mark-to-market basis. So that's holding up the U.S. But in Canada, remarkably, we've achieved that now. We've got a consolidation in the crypto space, in the exchange space. The emerged winner is WonderFi. I'm very proud of that. I'm a shareholder, obviously, and I own the stock, just to disclose that and be transparent. But I think it's a renaissance period now. And the stock is trading is a penny stock now, but I think that's going to change, because the minute you start to get integration of financial services to all of these asset classes in the US, Canadians will also allocate the same way, and that will include banks. Now, we've got an oligopoly of banks here. Where are they going to get liquidity? On an exchange regulated by the OSC, cleared by the OSC, in compliance with the OSC, and that's WonderFi. Over 1 million accounts in Canada, in every province, completely in compliance with the regulator, not being litigated, and at the same time, you can actually hold your coin there and have liquidity and full transparency. So that is the picks and shovel of the Canadian market, and I anticipate tremendous value inherent there over time. Globally, you've got M2. That is sucking a lot of assets off Binance right now because it's compliant to the ADGM. So if you're Asian or Middle East or even some European countries, that's where you're going. For full disclosure, I'm a shareholder there as well. So I would say Bitcoin, I'm long. I haven't sold any off. It's a 5% weighting in my portfolio. So is gold. And watches are at 3%.
We'll touch on that coming up. M2, for anyone who's wondering, is Middle East.
Yeah, M2 is the exchange out of Abu Dhabi. It's backed by sovereign wealth. They opened up with $300 billion of liquidity. They're tied to the banks there. They're completely compliant. You can own it. The only way you can own it is buy shares in a company called Phoenix, which is on the Abu Dhabi exchange. That's how I got access to it, because it's private right now. But you know, the largest sovereign wealth funds own it, so I feel pretty comfortable with the position there.
You've been a proponent in the, you know, for lack of a better term, the picks and shovels, if you will, of this industry instead of the assets themselves. For someone who's maybe sitting on the sidelines saying, a lot of volatility here still. The higher the price goes in Bitcoin, it seems like, you know, the more volatility we're going to get. Where would you look at this point for an opportunity if you're looking at the exchange side of things?
Well, now that, you know, I look at it, if you're an investor and you say, well, I want to have some exposure to cryptocurrencies and digital payment systems, I would own exchanges and probably 2 of the tokens, which would be Ethereum and Bitcoin. But I would never buy an ETF that held those. Why would I pay the fees for an asset that I can simply open an account on WonderFi and own it in perpetuity at a fraction of the cost of what I'm being charged on an ETF? I'm still exposed to the asset, I'm still exposed to the volatility, but I have total transparency and liquidity. And that is essentially my thesis about why you would own exchanges. I'm never going to buy an ETF for digital crypto. That seems insane. I don't know why anybody would do that. And so just find an exchange that's compliant, open an account, transfer whatever amount you want from fiat, and you can certainly do that at WonderFi in Canada, the Canadian dollar. And then you can monitor it, you know, 24/7 on your mobile phone if you wish, and feel that you're safe because it's regulated.
You mentioned banks there. Let's talk about, we had a significant print, I think, this morning for CPI and inflation on this side of the border. Talk us through from a higher level here where you feel this inflation battle is, what needs to be done. As far as the Bank of Canada specifically is concerned, we had 1 cut already. They were pointing at July saying maybe 2 coming, but that looks like it's going to be kicked down the road a little bit. A lot of people in a tough spot, I think, coming up here in the next few months as far as mortgages are concerned.
Yeah, that cut looks like it was a mistake given the print this morning, and they won't make any more. Remember, inflation in Canada is not the Bank of Canada's fault. They are reacting to the reality that the government printed too much money during COVID. It wasn't necessarily well spent, but many governments had a knee-jerk reaction to do that. The PPP loans in the United States, the ERC, credits, the 1099 that's going on there now for small business. The CHIPS and Science Act, Inflation Reduction Act turned out to be very inflationary. We probably double printed, both in Canada and the United States, what we needed to, given the but we didn't know what the pandemic was going to be like. So you can't put 100% blame on the government here. You can blame them for a lot of other stuff, but not necessarily that. Inflation is sticky in Canada, particularly around protein, foods. We're up about 32% since the beginning of the pandemic, and we have stopped going up at a rapid rate, but we're still way above what we were. Housing is a huge problem. And then there's energy. We have, I would argue, bad energy policy in this country. And just as a result of it, we're paying the price. We're one of the wealthiest countries on earth with energy resources totally squandered by bad policy. And so this is going to be a very difficult time, as you suggested, in the rollovers of commercial real estate in Canada and individual residential housing. It's going to be painful. And Again, Bank of Canada has their hands tied on this one.
Yeah.
They're going to have to hold the line. Otherwise, they're going to have even worse inflation. And so I think there's a bigger issue at play here about the governance of Canada and the policy in Canada, and what should be done next is a good question.
For our friends in the U.S., big part of our audience, obviously in the U.S., the situation very different from the Fed's perspective. We're in an election year. I want to get your thoughts on what the market's going to do as far as the election coming up in November. But how does policy shift here to help this inflation battle south of the border?
Yeah. So remember, for our friends to the south of the border, they were promised 7 rate cuts only 14 months ago. They got none. And they're not going to get any this year. The prints are really strong inflation there. It's very sticky, particularly, again, on protein, on energy, and on vicious on housing, just brutal. And so even rents and everything else. So you've got a very interesting time in the U.S. because you're weeks away. Actually, this week will be the first debate. It'll be heavily focused on policy, inflation being one of them. But they have some other issues. They've got border security, which is a massive issue now with the imagery of every day what's happening over the Texas border. They've got massive issues around housing prices. They've got issues around energy security. They've got foreign affairs issues around wars and their roles in them. And obviously you can see how divided the country is. It's almost got a Vietnam feeling to it these days. I teach at Harvard and a couple of other colleges there, and it's pretty nasty on campus. And it doesn't matter what side you're on, it's nasty. And so that is a divided situation. But many people ask me, well, why is the market so buoyant given this divisiveness? Well, because there's a 50-50 chance that we're having an administrative change south of the border to a very accommodative, pro-business, low-tax, lighter regulation. That's at least a 50-50 chance, and that's why this is happening. You're hitting new highs in anticipation of a change of regime in the White House in November.
It's an interesting point, and more to come as this year plays out. We're a lot to cover. As I mentioned, I want to get to semiconductors, and I want to get to AI. You've been very active in the AI space this year. Tell us a little bit about your ventures and, from a higher level, where we're at as far as AI is concerned.
It's a great question, and AI. And people ask me, what about Nvidia? What about Nvidia? Well, why is it such an extraordinary situation? Well, AI, everybody should consider, is going to affect all 11 sectors of the S&P with productivity enhancements. AI development itself is really expensive. So you've got 3 major stacks being developed. You've got the Amazon stack, you've got the Microsoft stack, you've got the Google stack. And in one way or another, they're in partnerships with each other, and OpenAI, et cetera. That's billions a quarter in terms of the hardware, the data centers, and the development. But once you have the stack, the real productivity is where I'm playing, and many others are too. How can I take a stack, add to the top of it for a vertical? And I'll give you an example. Watches are, as you know, are near and dear to me, but I'm a watch collector, and one of the most broken systems in jewelry and watches and collectibles is the insurance policy. Most people put their watches on their home package and say, okay, I bought this Rolex for $17,000 20 years ago, and my home insurance policy, which depreciated its value, says it's worth $800. The market price of that Rolex is $64,000 now because it's a vintage Daytona. And so, the value of that changes daily. Now, it's impossible to write a policy, a replacement policy, unless you have AI that can scrape the data from the auctions every 24 hours and guarantee in a policy that can be repriced daily on the risk. And you can issue that policy now, and I've done that with a product called WonderCare. I did it for myself to ensure I may travel with, let's say, 20 or 30 pieces, and the rest stay in bank vaults. I don't need to insure the stuff under the streets of Zurich. I need to insure what's with me here in Canada, for example. So that policy allows me to do that at WonderCare. We've partnered with some of the largest reinsurers in the world. They understand the issue. They too have been befluxed by it. They couldn't figure it out. We did it. And I'm very fortunate that I have millions of followers who are also watch collectors. So I'm able to acquire customers at a zero customer acquisition cost, write policies, and together we modify the technology. So that's just for insurance. That's just one sector. Let's talk about media. Every day in the United States, $50 million worth of remnant cable time is purchased in 15-second and 30-second blocks, whether it be a cable or a network or whatever. And let's say, in my case, I have 52 companies spending $2 million a day, $3 million a day. Well, why don't we aggregate our buy and buy $50 million a week or $60 or $100 million worth of cable remnant and parcel it out to 1,000 companies?
Right.
We can only do that with an AI stack, which we've done. That's wonderads.com. You can go and see it there yourself and look at it. So you as a small business only spending $50,000 a week on social media can now put a third of that into remnant cable and lower your customer acquisition cost. And on and on and on. So I'm working on these stacks. That's really what matters to me. And here's another one. Social media for small businesses. When you have to post on Twitter or on LinkedIn, on Instagram or on TikTok, it's complicated if you're trying to do that yourself. Why not just use an AI stack in wonderengine.com, which we've done, and all of these companies are signing up for 99 bucks a month and automating all their social media, generating it through social media, posting it through social media, monitoring customer acquisition costs through social media, all with an AI stack. So I've ripped off Richard Branson. Remember, he does everything with Virgin?
Right.
He was the guy that told me this. Yeah. You're Mr. Wonderful. Make everything Wonder Ads, Wonder Engine, Wonder Care, and you'll see the spillover effect, and he was right. So it's good to be Mr. Wonderful.
Always. I read a note this morning, quickly on the semiconductor side of things, I read a note this morning suggesting shorts on Nvidia were up 5 billion in 3 days.
Yeah.
Obviously, no one's picking a top on Nvidia for a short, but the entire float, if you consider the short percentage. What brings this back down to earth? It's been just a monumental move for a stock like Nvidia, the entire sector. What brings this back down to earth?
Shorting the stock is mispricing the reality that Nvidia is not a semiconductor company, actually. It has a huge moat around it. Its firmware is more valuable than its chipsets. It's writing the algorithms and the operating system that I can build a stack on top of. So if I have an Nvidia data center and I'm buying and renting time off it, I can build anything I want on top of that, but I have to be compliant through their API. That's how they're protecting their moat, and no one's even close to what they've developed there. Now, 18 months ago, the refresh rate of that moat, if you want to call it that firmware or that software, whatever you want to call the integration with the chip, was a 36-month refresh cycle. In their latest iteration, they've turned it to 24, and they just came out last week and said we're going to refresh every 12 months. So nobody can afford to compete with that right now.
Yeah.
And so what will bring the stock back to earth will be when someone like an Amazon, which is spending billions on their own chipset and their own moat and their own firmware, announce their first corporate customer. Then all of a sudden, it's like data centers. It's like AWS versus Google, right. And you're going to see margin compression because of commoditization. That will happen. When? I don't know. But when that happens, you want to be short Nvidia.
I know there's two guys over at the desk that want to say hi and have a couple of questions.
Oh, those
there.
guys, the watch guys over there.
The watch guys over at the desk here have a couple of questions. We'll bring in Sean, I think, first.
Yeah, I'll take it. I just got the Luminor on right here. What, you coming over here, Ramin, in 1 second? Yeah, there it is right there. What do you got on there, Kevin? A lot of people are asking.
Well, I'm featuring two. I've got, let's go vintage Jag Kutra, and this is vintage, which I love because it has 2 time zones. Flip it over, and there's a different watch completely, both in 2. Oh, I love this kind of stuff. Just to tease you, because I knew I was coming here, I've got the puzzle, which is the little Rolex puzzle. I don't know how many there are in the world. That's Abu Dhabi time. So I've got Toronto time, LA time, Abu Dhabi time. That's what I'm talking about, baby. I'm talking about time zones here. And of course, these are both fantastic pieces. And mostly I wear red bands, but I thought just to tease you with this puzzle. I mean, that's...
I'm going to come over and have a look
You're
at
never even going to get to touch this watch. You'll never see this watch again.
I'm going to come over and have a piece. I have a quick look. I got to get Wonder Care myself, I guess. On
you do. You absolutely do.
I saw someone in the chat. You know, one thing that I think you need to look into, Wonder Bread. I mean, if you took that over, then it would be completely...
No, actually, it's Wonder Bra. That's what my wife said.
Okay, let's go bang. There it is. Bang, bang. All right, we having fun. We having fun now. Kevin, I did want to bring up a good point because I thought you made an excellent one there about why are you buying an ETF? Why are you paying that 2%? Why are you paying a management fee when it comes to crypto? And I just have WonderFi up right now. now today, up 16% today. WonderFi, May 8th, you guys, or WonderFi reported 4.9 net income revenue. Great move there. And then, of course, the BitBuy and Bitstamp of Canadian clients. So again, WonderFi having a great day today. Look, what can help a lot of us buy some of those watches, and apparently maybe we'll, if we ever get a chance, would be great calls on sectors. When you were here back in 2020, you made a great call, and I have the chart up right here. You talked about XOM, and I'm never going to forget about this. Down here, $30, $34, when, of course, oil actually went negative. You know, good move back up to the upside. Is there anything you're looking at right now? I know that some of the Canadian banks are depressed, maybe too early there. Any sort of sector right now besides crypto that you're looking at?
Well, Canadian banks are a must-hold for Canadians. They go through volatility. There's obviously a big tax change today. We've got to talk about that. There's some issues around it.
Right.
I think the anticipation globally about Canada, because I spent a lot of time in Abu Dhabi, as you know, is they're awaiting regime change here. This is a very investable country. Unfortunately, currently uninvestable because you can't get anything done here on large infrastructure or resource-based projects. But there's an anticipation that there's going to be a change in Canada in the next 18, 24 months, whatever, and that this place will be very investable. So I've sort of started, even though we've got a change in tax, the natural resource sector in Canada is a huge opportunity. And so how do you service that? Well, you do that with the Canadian banks. So, you know, owning Canadian banks anytime there's a sell-off is a smart move for any Canadian. And you can say, oh, I like this bank over that bank, yada, yada, woof, woof, woof. You might as well just index them and just own them all, because at any one time, it's an oligopoly. These guys are the best run financial institutions in the world. You know, I want to do a shout out for them. They've done a hell of a job during volatile periods. They are highly regulated. They're very well managed. And for me, the XFN, I guess, is the ETF up in Canada that owns them all, financial services. It's a good way to put on a 5-6% weighting in Canadian banks. And I tell every American investor I have, they say, what's the best way I can invest in Canada right now? Buy the banks. Buy the banks. Get that div, get that cash every month, and just own the Canadian banks, because they will never, like some of the US banks on the regionals, go to zero. There's going to be a lot of zeros in those regional banks over the next 36 months as they slowly default on commercial real estate. You can be safe on a Canadian bank. So, you know, they're having some rough days, but they're getting beaten up a little bit. But you can't go wrong with a Canadian bank.
Right. We do like that cash flow coming through there. And again, I looked at the XFN as like basically exactly as you mentioned there. It's not doing too bad. If we come over to the screen right now, XFN above the 200 period and trying to get back to the 50. So I think you might be right on there, Kevin. And I do agree with you with that hot CPI print this morning. It looks like we will not get to refinance our mortgages anytime soon as the rate.
Meanwhile, you stick your cash in the bank and you're getting your 5.1%. You know, what's wrong with that? And that's we're not going to have any more rate cuts. That ain't going to happen in Canada, not after today's print. And that first one was a mistake, and so that's going to hurt on housing.
I mean, I know
it's not easy, the task, as you were sort of saying, that they have to thread the needle. We had obviously an event a few years ago that was very different. Personally, I want to thank you. Sean talked about that energy play. I know I bought Chevron around that same time, and it gave me the oomph to maybe just get in a little bit earlier. And I feel the same way I was talking about TD specifically at some lows. Oligopolies are great if you're an investor. You can talk about them economically all you want. But more importantly, I'm not going to say which reinsurer. My wife works for a reinsurance company, and she's in the industry, and her boss is in the AI space for it. And I can tell you, I was an investor in Lemonade in the US. And what got me away from it was what they weren't able to accomplish, what they said they were going to be able to do in revolutionizing, and how hard it is. So I want to say kudos for you for coming out with these products. You mentioned the watches. Are there what are the other addressable markets that you think are the biggest ones to come online? Obviously, near and dear to you is going to be insurance on your watches. But I think there's such a massive addressable market for more flexibility in the insurance industry. In the simple places like auto, it's a huge, huge problem, I think, of inefficiency, which I was incorrect in thinking Lemonade was going to be able to solve, and I got out of it, thank goodness. But what else do you see?
So that is a great question, and let's make it specific to Canada for a moment here. You know, Canada gets beaten up in the healthcare sector like crazy. All around the world, they criticize the Canadian healthcare system. They talk about it being, you know, social medicine and all that stuff. And yet for catastrophic illness, you know, let me give you a case in point. And I'm speaking about the digitization, the potential, the incredible potential of digitizing healthcare and what we could do here in Canada if we can get our laws behind this thing. But so I'm very fortunate. I need a hip replacement for 32 years of playing squash. My right hip is killing me. I want to get back in the game. I've been avoiding it for 2 years. I could go anywhere. I could go to Abu Dhabi. I could go to Dubai. I can do anywhere in the United States. And I also can come to Canada. Mm-hmm. So nobody knows this, but in Canada, we have some of the most advanced doctors in the world in hip and knee, in the world. There's a guy here, Sebastian Rodriguez is his name. He's the guy. He's the GOAT for hip replacement. Where is he? Humber River Hospital.
I was going to say.
So I went up there. I met the administration. I met him. I met the whole team. I saw the lab. They've got this incredible AI digital training lab for knee and hip, where you actually put on 3D goggles and you have a scalpel and you are taught the procedure in 3D. It's unbelievable. And we're leading the world in that. And everybody's crapping on the Canadian medical system. So I chose that hospital for my hip replacement. I'm going to blow those guys up. I'm going to say, look, let's videotape the procedure, and if I live through it, that'll be very good. and so, you know, it's sort of, let's celebrate what we do so well here and give these guys the shout out they deserve, because I combed the world. I went everywhere. If you're getting your hip replaced and you're in India, you're in Abu Dhabi, and you're in Riyadh, you want that hospital.
Yeah.
Because they do 13 procedures a day. Wow. You're in and out of there, if you're lucky, in 45 minutes. A day surgery. That's amazing. Canada. And so I see the digitization of the healthcare system as the next big sector. It's kind of a derivative story on the hip thing, but we could lead the world in this because we have really good potential, hospital by hospital in Canada, to coordinate on that. I think that's the next big thing. We're going to have to change the government for that. We need some competency. We don't have that right now, and I'm looking forward to getting rid of the current government. I mean, no disrespect, but they're terrible, and everybody knows that, and the whacking stick has to come out now.
I mean, it's a great subject, and I know Toronto Western is well known as well in Humberview also. So, I mean, best of luck, first of all.
Yeah. I really wanted to work out.
Get back on the squash court.
Yeah.
Let's wrap it up. I know you're busy. You have a busy schedule today. Let's wrap it up with just a look ahead. Give us two scenarios here, based on the outcome of what's going to happen in November. A lot of people sitting here right now saying,
yeah,
how do I position myself? What do I do here going into the latter half of this year? Give us both sides of the equation.
Well, I think from a sectoral play, I think energy in the U.S. is trading at a huge discount. And you know, if the Trump administration is successful, they have an energy security mandate, which means, I mean, there's a really interesting narrative occurring in this sector. You've heard of the ANWR, obviously. That was shut down by the current administration, but it's one of the largest pools of oil on Earth. And so if you think about what happened in Norway, or even the potential we had in Alberta in the 70s, you could tap into the ANWR in the US, and this is why it's so attractive, and put a 3 to 7% royalty on every barrel at the barrel head, and pay down a massive amount of the US debt over a 7 to 10 year period. And that, for the first time, is being discussed on a bipartisan basis, which means a massive amount of drilling in the ANWR with the new clean technology they have, but that's right on the coast to the Pacific. So you think about the potential for serving the Asian nations with that oil. That I like a lot. I like that for all of the energy sector in the US. So going long US energy names, I'm definitely doing that into the election. The other interesting situation is what's going on in terms of AI beyond Nvidia, because I'm really bullish on what's occurring in these sectors we talked about earlier on a vertical basis. And so buying the Russell 2000, now I don't buy the Russell 2000 itself because half the companies aren't profitable, but Alps has an ETF that I was involved in years ago in indexing called OUSM that has about 300 of the Russell 2000 companies are more in the mid-capish, but they all pay dividends and they're all growing faster than the S&P. They're domestic companies, so if you get a lesser regulated environment with a new administration, they're going to benefit the most because they don't have FX problems, they're not trading in foreign currencies, it's all US domestic. And so I like that sector. So OUSM is a big holding for me going into the election, kind of like a 12, 18-month hold, and I'm getting paid every month to own it. So I like that one a lot.
Two great ideas. Big year to come. Rest of the year, there's tons to look forward to. It's always a pleasure to get great insight from Mr. Wonderful himself. Kevin O'Leary is chairman of O'Leary Ventures. Appreciate you doing this.
Thank you very much.